Hello and welcome along to the Property Academy podcast. I'm your host, Ed McKnight.
And I'm Andrew Nicol.
And today on the show, we are once again joined by Simon Yarrell from Axico. We are talking about insurance, and particularly in this episode, how the insurance industry is changing. Now, you have sent me so many texts asking about specific things you've heard on Radio New Zealand or stuff around insurance, because there has been a lot hitting the news recently about how the insurance industry is changing, which is what we're going to delve into today. We're going to talk about areas, we're going to talk about global warming to find out, well, what do you need to know as a property investor, and how should you be changing either the properties you buy or your approach to insurance? So Simon, thanks again for joining us on the show.
Thanks, Ed.
What I want to know, just to start off, is what is causing the insurance industry to change? What are the factors that are making these big, stable, long-ranging companies change what they're doing?
Well, Ed, that's a big question. And, you know, in a nutshell, it's a factor of things: global warming, reinsurance costs overseas impacting on the New Zealand market. And then, of course, we live in a shaky old island called New Zealand. And insurers, we want to see them having profits because they need to get some good years because those bad years are still around the corner. And so region by region, where we used to have a situation where insurers would just take a New Zealand wide approach. They're now looking at, well, if Andrew's got his house on the foreshore of Christchurch, then he needs to pay his bit if he chooses to live in that spot. And if Ed decides to live in Avonhead on TC1 land, then, you know, you should be remunerated financially for a lower premium. But mixed into all of that is they can't start charging Andrew $13,000 a year and you $500, because that's tough on Andrew and probably
Very
a bit
tough.
unfair on you. So all of that into the mix. Really, my point is that when you are looking at buying a property, do your due diligence and find out what the cost will be for the home that you're looking at buying in your particular region.
And that makes sense, right? I loved it when the New Zealand Transport Agency changed. So where you pay, your rego now is different based on what sort of car you have.
Oh, really?
So I drive a Toyota Corolla 2008, and my registration costs are minimal per year.
What does it cost?
Something like $90.
What does mine cost?
I don't know. It's probably something like $300 or $400.
Really?
It'll be significantly more than mine, because people who the sort of cars that I drive don't tend to crash and have big costs on the roads.
It's because you're driving them compared to me.
Well, that's probably exactly what they're looking at. So that's a form of risk-based pricing applied to registrations, which, at least for me, works very well because I save an extra $300 compared to what I otherwise was spending prior to that. Now, one of the areas that is particularly impacted is Wellington. Why is that? Why is insurance becoming harder to get in Wellington? And what are the impacts to mum and dad listening to the show, living in Wellington? What does it mean for them?
Wellington is it's a big area, and I just think that if you're building something brand new for your investors in a location of Wellington which is of lower risk, the premium will not be too bad. But of course, it will always be higher than Christchurch or Hamilton or Auckland because of the fault line that runs obviously through Wellington. I think mixed into that, though, is a lot of other things like the age of the property, the size of it, the sum insured, whether it's a body corporate or whether it's, a unit title. So, all that goes into the mix. But the great thing is that if you contact an insurance advisor, they'll be able to give you an exact quote so that you can factor that into your returns.
And I know dealing with some investors that own older properties in Wellington at the moment, they are getting to the point where it's just uneconomic to have those type of properties, which is hard, because if you're an investor there and you've owned a property for a number of years and the insurance triples, you have to put up your rent. Now, rents in Wellington are already really, really high compared to kind of prices.
Can you give us an example of that? The insurance costs are going up
Absolutely
3 times.
So one of my investors, their insurance is $10,000 a year.
Yeah. Well,
that's for an apartment. It's worth about $800,000 apartment in an old building.
Yeah.
What's the rent?
$1,000 a week, $1,200 a week probably.
Yeah, so it's a bit. The insurance is making up 10 weeks worth of rent per year.
That's pretty big.
Where it might be 3 in a Hamilton.
And you might even find, too, Ed, to Andrew's point, that it's not just about the premium that's charged, but you might even find that excesses can increase as well in certain areas.
Yes.
So the insurance company can look at it from two perspectives. They can look at what they charge you on a weekly or monthly or fortnightly or yearly basis, and what they can also do is start putting in exclusions to areas they don't like, or increasing the excess if they feel that they're getting hit too hard with ongoing, claims.
Let me just make sure I've understood you right as well, Simon. So if I'm buying in Wellington, as long as I'm not buying a property that's at undue risk, then my insurance will be more expensive than Christchurch, but it's not going to be obscene.
It could be triple the price. So if we said 500,000 house insurance on a unit in Christchurch is 1,800, it's probably going to be more like 4,500 to 5,000 in the Wellington market as a rough ballpark.
So this is why, as part of your due diligence, if you are looking at buying in a market like that, it's really important to kind of at least get a guide as to what that might look like. You don't have to go through the full insurance application necessarily. Certainly, if it were an existing property, I think I'd want to have all that done because, Wellington's been through earthquakes now, as has Christchurch. If you're buying a property before you go unconditional, you want to see your name on that piece of paper saying that you've got a certificate of currency. Is that what it's called?
And Andrew, even some insurers won't even offer insurance in the Wellington market.
Wow.
So it's got a bit like that.
Okay. And you mentioned exclusions before. Tell us how they are, what they are and how they work.
Well, to give you a real life example, Andrew, I had a client here in Christchurch that lived on Waimea Terrace, and going back a few years, there was lots of flooding around that area. His insurer had sent him a letter on the anniversary, said, look, happy to insure you, but we're not going to give you any cover for flooding anymore.
Happy anniversary.
Happy anniversary. So he was essentially left high and dry for a number of years. Well, she was. But, my point is that eventually he did get insurance through another provider, but there was a period of time where he was actually stuck. And you got to remember that with insurance, it's a year-by-year arrangement. So just because the insurer is happy to insure you today doesn't mean to say they're going to insure you again and again and again forever. So my point being is that they have the opportunity to go off risk, change terms, put exclusions, increase your premium on the anniversary of your insurance.
And just a note on that. So if you have a mortgage, then it's required that you have insurance as well. And so the bank is actually noted on the insurance policy.
Yes.
Does the bank get notified of such changes?
Yes.
Now, if I'm the BNZ and I've lent 90% against that property at Waimea Terrace, and then I notice that there's an exclusion for flooding, I might ask that person to pay back some of that money so that I'm not at such risk. Is that kind of a risk there?
Well, Andrew, I can't speak for what the position of the bank would be, but I just do know that they would be notified. Just like if the policy lapses, then the insurance company has an obligation to tell the interested party, BNZ or whoever, that the house is then uninsured. But I did notice through the earthquakes back in 2011 that my own home actually was uninsured for about 3 years because my insurer exited the market. I went back to the ASB and said, hey guys, just want to let you know, the house that you've lent me money on is now not insured. There was nothing they could do about it. They just had to sit it out.
That's the challenge sometimes. So in some instances, they will sit out. But then if you wanted to leverage against that property, buy another property, if you want to, you're stuck, right?
My life was on hold for 3 years.
Yes.
Yeah. But that's an extreme scenario.
Yes.
But that's what you can be looking down the barrel.
But also really important for just to remember to make sure you are making those insurance premiums. So I too have had a property where there seemed to be a mix-up in the change in bank accounts. This is years ago. And I remember an insurance letter wasn't sent to us. The policy lapsed and we had to get it reset. And it was quite a rigmarole. But technically we had no insurance on that property for a period of time. Nothing happened, luckily, but that could be a real issue.
Correct. But what we actually do, Andrew, at Axico is whenever the policy cancels for whatever the reason might be, but like you've just explained, we actually get notification of that before it actually expires. So we then ring your clients and say, hey, at the end of the day, your policy is about to lapse. And so it's sort of a backup plan.
Yes.
Someone else is caring for you.
And certainly post-earthquake in Christchurch, we're all a bit wiser towards insurance no matter where we are now, right?
Correct. And look, I think I've actually had a couple of clients where that's actually happened. And you have got in touch with me and we've actually sorted the problem out real fast.
Yes.
But when you're trying to do insurance on your own, you are taking a lot of responsibility on your own shoulders for all those types of things. And having a professional sitting in the background, keeping an eye on things for you is worth its weight in gold. And if the policy has expired and there's only a day, where it has expired and something goes wrong, the insurance company will not actually, if it's not their fault and it's yours, they will literally, the axe has fallen and you are uninsured.
Yes.
So be careful. Your insurance policy is really essentially supporting your investment.
Yes.
So treat it very, very carefully and have someone helping you with it, because, mistakes do happen. People do travel overseas. Visa card, credit payments can stop.
Absolutely.
And, if all the ducks align, you can be left in a very awkward position.
And so tell me, so if I am buying an older building that has been through an earthquake in Christchurch or Wellington, what do I need to supply the insurance company nowadays to get insurance?
Well, Andrew, if it's been through a number of earthquakes, the insurance company wants to see the EQC scopes, they want to see the sign-offs, and if cash settlements have actually been made to the customer, they want to see that money's being used to repair the home.
Yes, and that's actually quite a common thing. So just to clarify what Simon means here, so if I've opted for a cash payment of $50,000 and then I've gone and bought a new Holden Commodore and not done the repairs, again, that insurance as a Clayton's policy, it's not actually real.
Well, the insurance company, I can't speak for every insurer, but the insurance company won't say the house is not insured. They'll just say, hey, look, you've been given that money, you've never fixed that cracked driveway or that damage to the pergola or the whatever, and they'll just deduct that off, or they'll just say, hey, it's unrepaired damage.
Yes.
But you've just still got to be careful, because when you're buying the property, you need to understand clearly what has been fixed and what has not been fixed.
And if a bank is lending against that, again, if they're doing a high LVR, an 80 or a 90%, they're going to take that into consideration, because it could be $50,000 worth of value that's actually not there.
Correct. Yeah. And look, if an earthquake strikes the next day, then it's an awkward situation, because the customer's going to go, well, has the work been done? You've bought the house. You don't know whether it has or hasn't done. So you just want clear clarity and a good paper trail, especially if you want to on-sell the house down the track.
Absolutely.
Now, we've talked a lot about Wellington and Christchurch. Obviously, almost 35%, 35% of the population lives in Auckland, and you've got a big volcano lying there. Is that probably the biggest thing that's affecting potential risk for insurers in Auckland?
Well, Ed, at the end of the day, we all know about those volcanoes, I suppose. The reinsurers and the actuaries and insurance companies all factor that into the big scheme of thing. But at the moment, from a pricing perspective in insurance, it doesn't seem to be having any effect whatsoever. So buying a investment property in the Auckland or Hamilton market, the premiums will not be any cheaper in those areas compared to the likes of Wellington, and obviously Christchurch sort of sits somewhere in between. So if I could sort of give you a bit of example, you're probably talking about on a 500,000 sum insured townhouse in Christchurch market around the $1,500 to $1,700 mark to insure. In Wellington, that's probably going to be $3, $4, $5,000 a year for the same sum insured, but in Auckland, it's probably going to be around that $1,300, $1,400 mark. So you can see that as you move from location to location, the premium does vary a lot, but in the Auckland market is as cheap as you'll ever get.
Andrew, let me ask you this. Do you think this is one of the reasons why we see gross yields as so healthy within the Wellington market? I mean, we've talked about that it's an admin city, you've got a lot of professionals, good incomes there, but perhaps is some of this compensating for the fact that the insurance costs are so high?
No, I think that's just a coincidence, but I could, because they were relatively the same pre-earthquakes. It's just that Christchurch has gone up a little bit post-earthquakes.
Now, while I was scrolling through my Radio New Zealand app, I saw that there are a couple of people in the media talking about that some coastal areas that could be affected by global warming. And in fact, I think we talked about Lower Hutt on the show only just a couple of weeks ago. There's been some chat that some of these coastal areas, like the Kapiti Coast, may not be able to get insured in the future. My question is that true? Are there going to be properties that won't be able to get insurance? And how's that going to impact the property market there?
Well, Ed, you're dead right. I mean, at the moment, they're looking at maybe 10 years' time before it's going to get really difficult for all of us. And we don't really know the impact of global warming. But the fact of the matter is that insurance companies are fair weather friends, and they will essentially look at retracting or putting special terms and conditions in areas where they're seeing erosion, a higher risk of flooding, and whatever the case might be. So I think at the end of the day, you've got to be really careful when you're looking at purchasing a property in some of these locations, because if you're requiring the funding from a bank, then there could be the time in the future where the house is uninsurable and the bank requires the insurance, and it's going to be an awkward conversation for that person at the time, but also, the value may decrease as well. It just is so hard to understand what it's looking like. But I think it's definitely worth putting in, if you're looking at buying a property in any of those locations, you want to be thinking about these things now, because it might be easy to buy this home or property at the moment, but who knows what the future holds. And it's probably 10 years away, but if things keep ski jumping and skyrocketing, it could be sooner. We just don't know.
And I guess the key thing to note there is it's not all coastal properties, but it's coastal properties that are susceptible to flooding, or that would be flooded if we had significant levels of sea level rises or coastal erosion as well.
Well, even Ed, like there's areas that I try and insure these days, and it just blocks me. It says, sorry, we do not want to insure this home in this location already now.
What sort of areas?
Well, Rocking Horse Road, sort of South Shore.
Yeah, no, I'm not. I should just say I'm not from Christchurch. A lot of people aren't. So what's that sort of area here?
So that's right on the coast of Canterbury, and on one side you've got the ocean, on the other side you've got the estuary, and there's been a lot of damage through that area. Now, look, I'm not saying that every insurer doesn't want to insure that area, but there's very clear signs that certain companies just don't want to be in that space anymore.
Yes, and that seems reasonable.
Yeah, but look, my point is that do your due diligence, be wary of these things, because only having one insurer that wants to insure a house in that location is possibly something you need to consider, because if that insurer says, hey, we're out of here, well then where do you go from there?
And you limit your ability to sell that property in the future. And if you are looking at this as an investment, and every property, even your own house, I guess, is an investment in that sense of the word, if the selling pool for that is so limited, you aren't going to get the growth that you want.
Fantastic. Let's wrap it up there, but please don't forget to rate, review, and subscribe to the podcast. It really does help us get the message out to more people. And of course, if you want to learn more about property with Andrew and I, why not check out our Property Academy video course? This is 19 lessons going through those fundamentals of investing in property here in New Zealand. Now, I'm going to drop a link to that in the show notes. Tap or swipe over the cover art, the link's in there. Or just go to opuspartners.co.nz, completely free. Don't even have to put in your email address. Thanks for listening to the Property Academy podcast. I'm your host, Ed McKnight.
And I'm Andrew Nicol.
I'm going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.